very much for joining us. My name's David Scholes. I'm Director of World Sales. I'll be walking you through the webinar today. This is Demo Day Wednesday. So the topic today is the new MPS universe and FE Analytics. Some of you may know, we created a brand new MPS universe. We released it only a few months ago now. It is quite different to the MPS directory that some of you may have already been using. So the purpose of today is really to walk you through that new universe and kind of explain the differences between what you get from the MPS universe compared to the directory, and also where it sits around our ecosystem as well. So in terms of an agenda, this is what we're going to try and cover off today. Quite a bit to cover off. We'll explain first of all what Nexus is. You may have heard us talk about Nexus over the last year. So I'll take a bit of a step back and explain what the Nexus platform is and where the MPS universe sits within that, and also where the kind of the MPS data touches as well. We're obviously going to focus quite heavily today on the MPS universe itself. Where is it? Where you will find it? How you can filter on different MPS solutions. MPS fact sheets. Those of you that have used analytics in the past know that pretty much everything you add to the active list has a little fact sheet link. Portfolios, funds, investment trusts, equities, etc. Well, now MPS have their own fact sheet link, and you can also get access to the MPS providers' fact sheets themselves. Then we're going to get into the ratings and sectors. Really excited about this. We've released new MPS ratings and MPS sectors for this universe. As with every other universe in analytics, they will have their own ratings and sectors. MPS should be no different, which they're not. So we'll cover that off as well. And then also, as I mentioned already, we've also got the MPS directory. So I'm going to kind of explain the differences between the directory and the universe throughout this session. Plenty of time for questions as well. So as I'm going through this, if you've got any questions, there's a little questions box somewhere on your screen. If you've not used GoToWebinar before, there's usually some sort of dialog box. Click on the question mark icon, ask as many questions as you like, and I'll make sure we get all of those answered at the very end of the session. Super, right, let's get out of here and let's move into Nexus quickly. So as I said, I'm just going to take a quick step back before we dive into analytics. What is Nexus? Where does the MPS universe sit within Nexus? So as I said, you may have heard us talking about Nexus quite a lot over the last year. Kind of the intention, the ambition of ours has been now for a little while to create one ecosystem of solutions that does everything that the advisor needs. So whether that's risk profiling, whether that's cash flow, whether that's platform due diligence, whether that's suitability reporting, annual reporting, fund research, MPS research, etc. You've got to do so many different things as an advisor, and we feel that it's kind of on us as a software provider to create one ecosystem that has best of breed applications that do all of that for you, with a little sprinkling now of AI. So our Nexus ecosystem looks quite like this. It's got analytics, which brings to the table three completely different disciplines: fund and MPS analysis and data. You've got all the reporting, all the risk profiling. That's where the MPS universe lives. So we'll be going into that in quite a lot of detail today. You've also got FE Cash Calc, which is a completely different application because it does a completely different job. It brings to the table cash flow, client portal, and the financial planning calculators. The MPS data does touch Cash Calc as well. So I'll explain that on this session. And also Advisor Asset, which is now fully integrated into analytics. So as an analytics user, you will have automatic access to Advisor Asset, and that gives, again, completely different disciplines: platform due diligence and charge comparison. So as I said, the ambition is to create one ecosystem, applications fully tethered to one another, so you can move client and portfolio data around that ecosystem. You can also move yourself around the ecosystem as well, because it's got single sign-on. And in terms of AI, because we've got this kind of underlying foundation, all of these applications working in harmony, hopefully with one another. You've got an AI overlay over the top now with Nexus AI, which has just been launched over the last few weeks. We're going to be building this out over the coming months, which is really exciting for us. But at the moment, it's a kind of a report generator and meeting kind of narrator. So it will join every single meeting of yours. It will take a transcript. It will create a recording for you. You can log into Nexus AI. You can interrogate those meeting transcripts, but also you can then spin that up into different templates, maybe like a vulnerability report, maybe just a meeting overview that you can then email to a client, etc. But also allows you to take the data from your meeting and push that into Cash Calc, particularly if the client's talking about their house value or their investment ISA or their objectives, etc. All of that stuff can sit in Cash Calc. So it's got a neat little integration with Cash Calc that can push that data straight to there. So that's, I just wanted to give kind of the broad picture. That's what we're building. That's the ambition. Let's talk about the MPS universe. As I said, primarily in analytics, but it does touch these other areas as well. So in analytics, let's get rid of that quickly. So in analytics now, every single analytics license is enabled for this. So under the Instruments tab on the left-hand side, where you'll usually find, again, as I mentioned, Unit Trustonomic Universe, Pension Universe, Equity Universe, Investment Trust Universe, all the different types of investment solutions. This is a new type of investment solution, it's MPS, so it has its own universe. So that's why I've got UK MPS. And underneath the drop-down list will be all of the providers. It's exactly the same way you'd interact with any of those fund universes. And if I type in, say, probably one of the most popular MPS providers, Quilter Wealth Select, if I click on Quilter Wealth Select, the provider underneath that will load up all of their MPS solutions. And you can see every single one of those is a little city code. So we think city codes are going to become quite popular in the industry. There is no universal coding structure for an MPS. You've got ISIN, CEDALs, MEX IDs for funds. They're universally recognized. MPS don't have a unique code. Well, we've created one. They're city codes we've had for years. Everything in our database has one. So we've got a unique city code for their models as well. So if you were to type in a city code up here, it will find the relevant model. But if I click on any one of these, click on add, I'll add that to the active list straight away. You'll see a couple of options available to you. So you'll see on the left-hand side, you've got a little fact sheet icon. So if you click on the fact sheet icon, as I said, just with funds and equities and portfolios, you get a fund fact sheet or an MPS fact sheet for this particular MPS. So you'll see a couple of things pop up. You've got the ratings, which we'll cover off in a bit, but a lot of you will be familiar with Crown ratings. So that's the Crown rating of that particular MPS, 5 out of 5. I'll get onto the methodology in a few moments. You've got what benchmark they benchmark themselves against. They benchmark themselves against the mixed investment sector. Therein lies the issue. You'll find most MPS providers benchmark themselves against the mixed investment sector, mainly because there isn't an appropriate MPS sector. They're having to use multi-asset sectors to benchmark themselves against, which is why we've built our own MPS sectors. We've got all the MPS data. We can now build sectors from that. So I'll come back to that in a minute, but that's the sector, the MPS sector they're benchmarked against. What their fund size is, or MPS size, AUM, what their objective is. You've got OCF details, the AMC, which is a DFM charge. You've got the biography of the fund manager at the very bottom as well. But you'll notice at the very top here, you've got provider documents. Quilter only provide their provider fact sheet on here. So when you click on go, you can access their marketing literature on that particular model portfolio. But we do support 4 different types of documents. We do market commentaries, we do manager commentaries, we do rebalancing reports, and we do provider fact sheets like we're looking at here. So you'll notice quite a few of them are providing more than just the fact sheet, but that's our intention now. Now we've created the underlying infrastructure and the plumbing for those providers to share these documents with us. A lot of them already share their fund fact sheets and their kids documents and their semi-annual reports, etc. We've given them a new ability to share all of their MPS literature as well. So I think in time, you'll see more and more of that literature being loaded up into analytics, but you've got quite a few examples of that here. With Quilter, for example. So that's the first page. Second page, performance. That's when the sectors come in. So you can see how it's done against its sector. The sector is the red line, the MPS is the blue line. So again, that sector is being created. Again, we'll get into the weeds of the sectors in a few moments, but the sectors, as you can imagine, is as a basket of MPS that take a similar level of risk to the one we're looking at based on equity content, gross content, we call it. And all of the other kind of similar MPS solutions have achieved that red line. In this case, that Quilter solution has done better. Then because we've now got a sector, we can load up quartiles and absolute within the rank as well. So you get all the quartiles, cumulative, discrete, and then also the FE risk score. How risky is that MPS against its sector? Interestingly, you can see it's slightly less risky than the sector, but it's actually outperforming it. So pretty impressive. And then the breakdown tab at the very top here as well, as you'd imagine, and we'll show you the won't show you top 10s, it will show you a sector, region, and asset breakdown of that particular model portfolio. And if it does have any investments in bonds or defensive assets, you got the credit rating load up as well. And again, that growth and defensive split underneath. Now, when you want to take that away, just click on the summary fact sheet at the top left-hand corner, and that will aggregate that all into just one page with your logo, of course, in the top right-hand corner. And again, it's probably worth pointing out, I haven't had to be enabled for this, for want of a better word. I'm enabled by this with default. I've got all of that data now, so any single model portfolio on our database, there's about roughly circa 1,500 of them. I can now get access to all of this data in one fell swoop just by selecting it from that main universe drop-down and selecting PDF here. So that's fact sheets. Just come back a few steps, just get rid of these. These are pop-ups. Back on this main screen, you'll also see that every single MPS, again, without restriction, has that little alert icon. So maybe the WellSelect solutions are quite popular for you as a firm. Maybe you use those on a regular basis, or maybe you're thinking about using them, but you haven't really made up your mind yet. You can set up alerts in exactly the same way as you set up alerts with funds, you can do now with MPS. It's the same concept. So I can say, like, first and foremost, maybe performance is really important to me. So if the performance of this solution ever goes up or down by 10%, maybe that's my tolerance, I'd like to know about it and I'll get alerted. What about that fact sheet data we were just looking at? If they ever change their DFM fee, if they ever change their fund, if the fund size ever drops considerably, if the OCF ever changes, let me know. What about the ratings? At the moment, it's rated 5 out of 5. Wonderful. So it can only really go in one direction. So we rebalance our ratings every January and July. So every single time that changes, again, let me know. Other ratings obviously available, like our FE risk score, that gets changed every week. And under the documents tab, these guys are providing fund provider fact sheets. So again, every single time that updates, let me know. And your email address will be down there, pre-populated as the owner of this account. You can save as many of those as you like. Again, there's 1,500 MPS, so you can set up a lot of alerts on these, and you'll get regularly alerted every single time any of those are triggered. So we expect that to be incredibly popular too. Let's get into the sectors and the ratings. So at the very top here, I'll come back to that in a few seconds. The one thing to note, actually, I'll come back to the director in a few seconds, but you won't be able to do anything on the right-hand side. You can't create charts, tables, or reports. That's when you'll need the directory. So we'll come back to that in a few moments, but I'll just come back to this left-hand tab under the sector. So under the sector tab, as with, again, all of the other universes, you've got UK MPS and all of the sectors will populate. As I've already explained, the percentage growth rate is based on kind of the equity stroke property content of the portfolio. We've purposely divided it. One would expect that it's usually 0 to 20, 20 to 40, 40 to 60, 60 to 80. We had a look at the data, we had a look at the asset allocation data, and we realized that a lot of the MPS providers were kind of building their asset allocations at those outer levels at 20, 40, 60, 80. So we've purposely kind of moved the bandings along a notch. So most of the solutions will sit in the middle of that band. So you know that you're comparing like for like. So for example, 15 to 30, a lot of the solutions in that sector will be equity content of about 20%. So we've tried to construct these sectors so that when you're actually looking at the performance versus risk makeup of the MPS within the sector, they should be very similar to one another. If you build a sector where the banding is 20 to 40, most of the MPS solutions in there are going to be either 40 or 20. There's not going to be much in the middle, and therefore you're not really comparing apples with apples if you're comparing an MPS solution that's 20% equity compared to a 40, and the same as you go up that scale. So we've purposely divided it like this because we've looked at the data of ours, we've looked at the equity content of those models, and we've purposely positioned the bandings appropriately to ensure that it is taking a kind of a true average, for want of a better word. But if I click on any one of these, let's grab this one. If I add that in, I can do anything I like with this on the right-hand side. So I can go and create maybe a 10-year performance graph. This one goes back to 2004, so this goes back quite far. But I can now start comparing that. Again, we'll come back to the directory in a minute. I can enable myself with some of the MPS solutions to start comparing it against that sector. On analytics, but there's no restriction on the right hand side. I can do what I like with that sector, but you'll see every single sector has a little fact sheet icon, exactly like a fund. All sectors have fact sheets, and this gives you the sector fact sheet for that particular sector. So again, growth 65-85. This is a summary of the sector. 337 MPS within that sector, provided by 64 providers. There's the average risk. There's the MPS with Alpha Manager rated. There's the best performers, there's the worst performers, most volatile, least volatile. Again, you can go over different periods of time, 1, 3, and 5. The performance of that sector as well, and the risk of it. So you've got the performance there, the discrete performance, and the rolling volatility. So a load of information, and probably the most important one is members. So what are the members of that particular sector? I'll give that a second to load up. You've got all of the MPS providers, the risk of each one, the crown rating of each one, the 6-month, 1-year, 3-year, 5-year performance figures, the vol, and the 3-year vol of every single one of them. Now, the crown ratings, again, you should be fully aware of the crown ratings. We've had crown ratings for well over 20 years. It's exactly the same methodology. There's no need to change the methodology of our crown ratings. They're tried and tested, very well used in the industry. And ultimately, an MPS is a fund in all but name. It's just not unitized. So, the Crown rating, for a recap, is looking at 4 different measurements. Got to remember them now: performance, consistency, volatility, and alpha over the last 3 years. And it gives, again, based on your sector position, which is why it's so important for us to have MPS sectors. So that the best in the sector get 5, the worst get 1, and everything in between gets 2, 3, and 4. And again, that gets refreshed every 6 months. So again, a new rating for you to very quickly determine how good that fund is against its sector, rather than having to pore over the data yourself. We've got 4 core measurements that can very quickly illustrate how good that fund has been against its sector over the last few years for you. And then breakdown, which would just be the asset split, the sector split, and the regional splits. You've got actually a kind of an aggregated asset allocation for kind of the average MPS that was managing that level of risk, which is that regional weighting here. You can see kind of the exposure to various different regions. And again, you can PDF that if need be, send that across to clients or any members of staff within the company. I'll miss off indices because that's not really that relevant. Fund filters will be incredibly popular with MPS. You can now filter on this MPS data. So I'll just get rid of this sector for a second and come back to it in a minute. Under the fund filter tab, if you click on new, I can build filters in exactly the same way I was building filters with any other universe. So on the left-hand side, you select the universe initially. In this case, UK MPS tells me how many MPS solutions there are, 1,500. And now I can start searching on them. So I could say, okay, well, I want to make sure that I'm only looking at one of those sectors. So we can say, maybe again, that 60 to 85, add that across, that will cut them down to size. 337, out of those 337, I only want to look at those that have done 5 crowns. Click on add. So if I know I said earlier, if you've got any questions, feel free to ask. I can picture someone asking the question. That table we just looked at in the sector fact sheet wasn't dynamic. It was quite static. I couldn't do anything with it. That's why you got a filter. If I very quickly wanted to sift that table to work out what are the solutions that are performing really well and have a really high crown rating, that's why you use a filter. That's to kind of create the dynamic table for you. So I've got 31 solutions. Only want to look at those solutions. Crown ratings only over 3 years. So let's make sure these solutions have done at least second quartile over maybe 5 years, and that also will guarantee that they're at least 5 years old as well. There is a launch date filter as well, so I could theoretically filter on that, but you can also do that via performance. Got other ratings, of course, FE risk score, so you could find out what I think the average risk of that sector was 70 odd, wasn't it? So you could say, look, I'm looking for solutions that have under 70 odd FE risk score as well, to make sure that I'm looking for good performers, but taking less risk than the actual sector. And then I could also filter on stuff like fund size. Want to make sure the MPS is particularly big, maybe the OCF is particularly low. Again, that launch date underneath. And you've also got things like passive and ethical. So under investment focus and under investment method and style, you've got various things like passive and ethical that you can also search on. In fact, if you're ever struggling to find any filter, I can just simply type in passive at the top, for example, and there it is. It's under investment style and it will find it, and I can now add that across. I won't in this case. And then you've also got regions as well, which is quite useful. So actually I'm looking for an MPS solution that's quite aggressive, that invests. Maybe I'm a bit concerned about US. Maybe everyone seems to be FOMOing into US over the last few years. So I'm looking for a solution that maybe bucks the trend a bit and doesn't invest so much in US. Or maybe actually, yeah, I'm really bullish myself on US. I want to make sure that I'm looking for MPS solutions that are also as bullish as me, kind of thing. So you can also filter on region and sector and asset class as well. Once I'm done here, I won't bother adding anything else. If I click on the show results tab, it will show me that essentially a more dynamic table. And you can see the quartiles if I only want to look at those that have got, basically high to low. So again, I might have an OCF field there. I might have a fund size field. I can just click on that tab there and it will automatically resort them rather than alphabetical. It will do best to worst, worst to best. So I can create my own dynamic tables with the filter. And then we've got 26 funds. So I can use this, I can PDF this now. So I might only do this maybe once a year, every 6 months. I just want to keep a tab on, what the MPS solutions have done across the UK and how they've been performing. So that's, if I come back to this main screen, that's the MPS universe. That's why we've created it. We've created it as a kind of almost like a precursor to the MPS directory. We've had the directory now for over 10 years. The MPS directory, for those that aren't familiar with it, is the ability to access MPS portfolios as a portfolio here, and then be able to create content over here. So on the left-hand side under the portfolio tools tab, you've got something called MPS directory. You can click on that, and maybe you work very closely with LGT, maybe you work very closely with Quilter Well Select, maybe they're your solutions that you use as your centralized investment panel, where you can click on any one of these logos. I mean, all of the MPS providers are pretty much on here. There may be a few kind of boutique smaller DFMs that aren't on here yet, but we're having they're seemingly added all the time. We've just added Asset Intelligence came live, for example, this week or last week. So you can click on any one of them. It'll give you a load of marketing spiel about who they are, what they do, any awards they've won, contact details as well. But you've also got Activate Me. So when you click on Activate Me, it activates you for that model portfolio. And what I mean by activate, they'll clearly be within the MPS universe, but you'll now have it as a portfolio here, and you can do a lot more with that data. So the idea of the MPS universe is give you that kind of soft touch initially, give you all of the data of all of the MPS solutions as a light touch. And you can go in there and run your due diligence, run your analysis, sift across the entire market, figure out which solutions you want to work closely with. And if I've decided based on all of that research that, yes, I really want to work with LGT or any of the others, Tatton, Bruin, etc., I can enable myself via the directory, and then the portfolio pulls across, and that gives me much richer data. I can do a lot more with that data. So the portfolio tab, when I open it, any model portfolio that I've enabled myself with will appear in this drop down, in this case LGT. So I can click on, for example, LGT balanced. I want to compare that maybe against a client portfolio that I've got, maybe with another MPS solution, or maybe that this is a new client I've just come across recently. He's got a kind of a legacy pension that I want to suggest he move across to LGT. You'll see when I left click on LGT though, I can open them up, and straight away I can see on the right hand side their underlying holdings, which is generally embargoed because obviously this is their IP. So on the right hand side, it will show their holdings, but more importantly, all the changes they've made historically. So I can click on any one of these tabs and you can see as it changes. So this is why the MPS data of ours is so valuable, because we've collected all the times they've made changes historically, all the way until launch date. So when you create that return series, when you create that performance graph, it's taken into account all of those changes, but more importantly as well, it's taken into account their DFM fees as well. So when I go and create, let's just do a 5-year performance graph, let's change it up a bit. If I do a 5-year performance graph on that model versus Keith Baker's portfolio, you'll see on the actual line chart itself, it's quite lumpy, again, for want of a better word. Every single time a change is on that LGT portfolio, a little dot has been placed on the line, so you can see how kind of actively managed it is. Even if it's a passive solution, you can see the active management of that underlying asset allocation. Give that a few seconds. Come on, some bit of a go slow. There we go. So you can see that purple line, it's got lots of dots in it. So you can say, well, look, this is what the portfolio has done. This is the true performance of that portfolio over the last 5 years, and these are changes we've made, and this is how we've compared against your portfolio. What you can also do here is under the options tab, under chart options, you can see all of the changes LGT have made historically. It's obviously quite a few of them, and I can go right the way back to the first one and click on OK. I haven't actually tested this out. I don't know what they invested in all those years ago. It might have been it might have started off with a load of cash for all I know, but it would then show what would have happened had they not. You can see it whirling around in the top left-hand corner. You can see what would have happened had they continued to follow that strategy compared to what they have been doing ever since. So come on, because we've got all of those changes, there we go. You can see, and in fairness, by the looks of things, it's not taking enough risk. So that's why they were changing it. But it's a really nice little mechanism to be able to show, well, look, Mr. and Mrs. Klein, this is one of the reasons we use LGT, because had they have just stuck with what they had invested in on day one, it would have followed that brown line. But because they're making all these changes periodically, they've been able to follow that. Well, they've been able to take the right level of risk, a balanced level of risk, and it would have done a lot better. But you can do that from any point in time. I just did that from the first one, but I could say, well, they made some really critical changes in COVID that I want to test out. Has it paid off, etc. So yeah, it's a really good benefit of having the MPS directory, pulling that richer data set into analytics, and I can interrogate it at a much higher level now. A couple of other things whilst I've got the charts loaded up. You can also do regular savings withdrawals. Again, another popular one. Maybe I'm using this solution as a drawdown strategy, and I'm saying to Keith, well, look, the last chart isn't really that relevant, right? Because you're going to be taking £1,500 a month from it, whereas that last chart was a bit more lump sum scenario. So I can show that on here. I can say, look, you've got a £600,000 pension, and you're regularly going to be taking £2,000 every single month. Yes, I can do this on a cash flow. We'll get onto that in a couple of minutes. but I can also do this, I call this reverse cash flow. I can also look backwards and look at real data and see what would have happened over that period of time. And you can see the two solutions side by side. Yes, taking £2,000 a month will gradually eat in to that underlying capital, but you can see which one's done far better. In fact, actually ours hasn't, right? With 600,000 invested on day one, LGT balanced is now worth 632, even though I've been taking £2,000 a month from it. But with your portfolio, Mr. and Mrs. Client, you've eaten into that underlying capital by 50 grand. So my one's managed to retain the underlying value, yours hasn't, because you're not taking enough risk. And again, I can do exactly the same with a regular savings chart to show pound cost averaging over long periods of time as well. Scatter charts are popular. Well, let's go into that now, actually. So I haven't got time, I've got plenty of time. If you go to scatter charts, I can do that over 5 years. So again, I can look at performance versus risk. It's quite, I haven't done it on this one, but it's quite nice to have all of the LGT models on here. So you can kind of show that efficient frontier curve. Or you do that with any kind of family of solutions. It's quite a nice one to show, look, this is their cautious solution, their balanced solution, their adventurous solution. You should have almost like a straight line. And this is where your solution sits, Mr. and Mrs. Client. And again, this is just quite a nice way of hopefully getting the client to recognize that their solution at the moment doesn't take enough risk. And what we're suggesting is something that's a slightly bit more risky, but that takes a lot better performance. Or maybe you are taking the right level of risk, but the performance has been pretty dire. And we're investing in something we think should perform better moving forward because it's better managed. So the only other things to point out here would be under the tables tab, I can create my own tables. So again, if I've got any data on the MPS side on the left, I can go and throw that into a performance table, just get the raw data from it. And also under reports, there's a really popular feature called portfolio comparison that allows me to compare those two portfolios side by side. So rather than deciding what type of chart to use, I'm just going to go and grab the two portfolios from the right-hand side and create a report from them. And it will essentially create a report that does all of that for me. It's going to compare the performance, it's going to compare the charge, it's going to compare the ratings, the volatility, the asset allocation, all in one nice little report. So we're saying, well, look, Mr. and Mrs. Client, this is what you've got now. At the moment, you're paying quite a lot. This is what we're proposing moving forward with LGT, not paying as much. The performance chart will load up in a second over 5 years. And again, that's net of the DFM fee, but it can also be net of the advisor fee and the platform fee as well. You can levy those into the performance. So the performance is net of all charges, not just a DFM fee. Again, I think this might be my internet. I expect go to webinars stealing half my bandwidth. You'll have to trust me. That chart will possibly load up in a few seconds. Then there's a nice little chart showing the volatility of the two solutions as well. Again, we're showing that our LGT portfolio is slightly more volatile, but that's what the risk profile has told us. That's what you need to invest in. And there's the difference in the asset allocation underneath. If you want to take more volatility, more risk, Mr. and Mrs. Client, you need to be investing like this, not like that. So that tells us quite a bit, tells the story of why we're moving those assets, and we can explain that at the very top as well, and PDF that. So that's how kind of the MPS universe works. That's why we've enabled it. That's why we have the directory in the background as well. So you can pull through the model portfolio data as a portfolio, interrogate the models at a much higher level, and start creating really rich content and reports on the right-hand side. How does that data then touch the other areas of our ecosystem? As mentioned, advisor asset and cash calc, the MPS data that is. So in a couple of ways, if I open up, let's do cash calc first. If I open up any one of these portfolios that I've pulled across from the directory, you'll see up here, you've got export to advisor asset and export to cash calc. If you click on that button, it pushes this portfolio directly into cash calc. So I can now start cash flowing on it. And what that means in principle, if I come back to this main screen, if I now port myself into cash calc, because again, it's got single sign-on, so I've already logged into analytics, don't need to log into cash calc. Here I am in cash calc. I can click on my client at the very top there. These are all my clients. I can grab Keith Baker. And if I click on the cash flow tab at the top, I already created a cash flow for this client. And that will be here, current situation. Just left click on it. And I've got this pension of his growing at about 4.5% because I know, just click on cash flow here. Because I know that he's got I've looked at analytics, his asset allocation is 50%, 60% defensive. So 4.5% growth rate sounds about right. So this big blue bar here is growing at 4.5% every year. Client retires here, and then he draws down those assets, and he's going to run out of money by the time he's late 90s as husband and wife. But why am I growing his pension at 4.5%? Well, I'm growing at 4.5% because, as I said, it seems about logical because it's a cautious to moderate solution. But sounds about right isn't really going to cut it. So under savings pots, the reason I've just pushed those portfolios into cash calc is because I can click on this edit tab here, Funny enough, I'd already selected it. What it should have been is 4.5%. It was growing out. Let's just reset this. Sorry, I should have I was messing around with this earlier before the call. Should have reset it. So this is what it should have been initially. And if I go back to my cash flow model, it should have been running out kind of early 90s, growing at 4.5%. But if I go back to my savings pots at the very top here, if I edit the savings pot, rather than growing at 4.5%, if you click on the template tab and then open it up and select Keith Baker, you'll see I've got Keith Baker that I've pulled across from analytics. That's why I've had that little icon in analytics that I've pulled across the portfolio. And it then basically creates a unique growth rate for that portfolio. And it's just taking the asset allocation data in analytics. It's got a unique growth rate for every single different asset class. And it's aggregating that into one bespoke rate for that client based on about 40 years worth of past performance data, annualized performance data, taking into account all the bull runs and bear runs, etc. So now I can update the pension and say, well, rather than just using my gut instinct, that you've got a moderately cautious portfolio, 4.5% sounds about right. Actually, I'm going to use real life data from analytics and have them spin up a logical growth rate for me, and I can now pin my advice on that. And now, as I said, the forecast initially was running out mid to early 90s. Now, even a very small difference, it's less than 1% worth of difference, has had quite a significant impact on my cash flow. We're talking about big numbers over big time periods. Suddenly, we've made that forecast last maybe 4 or 5 years more than it was a second ago. But what about the proposed portfolio with Vestra, the one that I've pulled across from the directory into analytics that I've then pushed across to CashCalc? Well, I can also do the same for that. So if I clone this forecast, this is my new proposed solution with LGT. I want to just simply clone the current forecast. So I've got 2 forecasts now, new proposed solution and current situation, but they're identical because I haven't changed them yet. So I'm pretty sure you know what I'm going to do. Click on new proposed solution, go back to my savings pot, and instead of keep mimicking Keith Baker's portfolio, I can should be able to find it, LGT. I think it's that one, LGT Wealth Managed Balanced. Click on update pension, and I've done exactly the same for that. So I've pulled across Keith Baker's pension and the LGT portfolio from CashCalc, from analytics to CashCalc. It's created those unique growth rates, and now I can compare them, go back to my cash flow image. Suddenly it looks a hell of a lot more positive, and I can click on the compare forecast at the top and show the side by side. Look, again, I've just been able to do that looking backwards. This is what has happened. This is real life data, and I'm then consistently using that real life logic, bringing that into CashCalc as kind of the heart of the cash flow to then push forward into the future. So I'm able to look backwards and forwards, but using the same consistent logic on both. And we say, look, this is what the proposed looks like compared to the existing if you were to increase the level of risk you're taking, Mr. or Mrs. Client. Now, the other area that sits is in the Monte Carlo modeler. It's probably better to do that on the current situation. You can see that the current portfolio runs out at 93. So if I click on Monte Carlo, I'm going to run a Monte Carlo stress test on this onto his portfolio, and I can say, look, the target is just simply not to run out of money. And the last forecast was running out about 93, so I'll run the same forecast on there it is, LGT growth. So that's where it's popped up from analytics. And I can now run 10,000 simulations off the LGT model. And it's essentially, again, taking the asset allocation of that LGT model directly from analytics. And now it's baking it into a Monte Carlo modeler, saying, look, with that type of asset allocation, with that type of risk over the next 20, 30, 40 years, you've got 95%, nearly 96% chance of not running out of money. It will be very, very rare for something carrying that level of risk and that asset allocation with 10,000 random simulations over the top to run out, as your existing forecast has done. The existing forecast is this one. You would have to hit some pretty horrendous bear markets over the next 20, 30 years for that to run out of money. The vast majority didn't. So they're the 2 areas of CashCalc where that MPS data touches. Again, I can use the directory in analytics to pull through that data into analytics, so I can analyze and critique that model in analytics, but then click another button and push it into CashCalc and do the Monte Carlo modeling and actually run proper forecasts based on the asset allocation data in analytics. Now, just coming back to analytics, where else does that model data sit? Lastly, it sits in advisor assets. So one of the core things you've got to do clearly on most switch cases is you've got to compare the charges to all of this. This is great that I'm suggesting LGT. balanced compared to what you currently got. It's on point when it comes to the risk. Asset allocation looks good, performance looks good, volatility looks good, etc. But I really need to do a deep dive on the charges. What are you paying at the moment, Mr. and Mrs. Client, versus what we're proposing moving forward, particularly when we're talking about pension switching. So on the left-hand side, our pension switch tool, again, for want of a better word, if you click on platform analysis tools, you can just simply click on consolidation switch analysis. Very similar to the charge comparison tool. The charge comparison tool is there when you don't have any seeding schemes, and this one's there when you do have seeding schemes. And if you click on this, this allows me now to basically pull through the LGT portfolio and compare that against Keith Baker's seeding schemes and compare it on a cost basis and focus on the cost basis depending on what platform we're going to offer. I'd stress first and foremost, you click on the portfolio tab on the left-hand side, very similar to analytics where you have all of your portfolios listed. It's quite similar in Advisor Asset. You'll have all your portfolios in here, and it has its own MPS directory. It doesn't really work the same as the MPS directory in analytics because you can just simply go on here and enable yourself with any amount. So you can click on pre-configured DFM. Click on continue. There are videos for this, that's why I'm not covering this off in a huge amount of detail, but you can click on OK, and these are the DFM partners have already put their models into Advisor Asset, and we've only had this live for a couple of months now, so we're adding them all the time. So if any of your DFM partners aren't on here, feel free to reach out to them, and they're, it doesn't cost them anything. They can just simply upload their models, and it only takes a matter of days to get on here. So, but essentially, if I use iBoss and Quilter, for example, I just simply click on the provider. As I said, it works differently to the directory because I just get everything in the directory enabled with every single model. I might not use all of their models. I might only use these ones. So I simply tick on the ones that I use and click on continue, and that will just pull through automatically, and they'll be under the portfolio tab. But the reason I'm showing you that is because when you then start running consolidations and switches, you can automatically select the iBoss models because they've been hard-coded and built for you. So what does this look like? What does this tool do? Well, this is Keith Baker again. We've just been using him in analytics and cash calc. So I want to run a comparison. He's got 3 seeding schemes. He's got Hargreaves Lansdown M&G SIP and a Scottish Widows pension. You can build as many seeding schemes as you like. Cross wrapper as well, as you can see, I've got 1 ISA and 2 pensions. It's very simple to build. You can either just tell us what the charge of those solutions are, or if you've got the valuations and the projections on those providers, you can just build those in like any other pension switch tool you're probably using at the moment. Once you've built the seeding schemes, the next page is, okay, well, where do you want to put this money? Where is it transferring across into? What are the solutions you're going to be using? So under the ISA and pensions drop-down tab, you can then select the portfolios. These are all of the portfolios enabled in your analytics account, including the iBoss ones I've just pulled across. They should be under here. There we go, iBoss. And in this case, I'm just going to select 8am, which is a model portfolio solution. I'm going to select Tatton for the pension. I can blend them as well. So if I want to do a 50-50 split, that is possible. But I'm just going to dumb this down and say 1 model for the ISA, 1 model for the pension. It automatically works out what the projection should be based on the seeding scheme data you've already put in. And then you can just drop in your advisor fee. You basically hard code that in up here. You tell us what your advisor fee is, and you just drop that in on every single analysis. And the moment you click on next, it will then take that data and run it across every single platform and tell you which platform's the cheapest to use. Now, admittedly, you won't use all platforms necessarily. You might have a centralized investment process and proposition that only uses maybe Transact, AJ Bell, and Scottish Widows, which is fine. Again, you can bespoke this to your firm. So you can click on exclusions before you run any type of analysis, and you can select exclusions and say exclude the 17 other platforms from any of my analysis. I never need to look at those. Only show me the 3 platforms that I do. Whereas I haven't done that. I haven't excluded any, which is why this will take a couple of minutes just to work its way through every single platform and run that reduction in yield calculation across all of them. Give this a second or two, and it will basically give me a nice league table, and it will say based on the solutions that I'm looking to use, 8am and Tatton, these are the platforms that are the cheapest. Now, probably worth pointing out, as I'm sure you're probably aware, those model portfolios have a different charge on every single platform, which is why it's such an important development for us to have these hard coded for you, because if I'm now looking at 20 different platforms, the OCF of that model is likely to be subtly different in each one of them because of the share class availability for each one. So that's why they're hard coded for you. So we know that. So when it's running this analysis, it knows that the 8am portfolio is costing X, Y, and Z on A, B, and C platform, and it knows that the Tatton portfolio subtly adjusts as well. And now it's running that analysis for you, admittedly slower than normal. I don't know why it's taking so long. Again, I fear that it's probably my bandwidth again. But give this a second or two. This will give me a nice little league table, and it also has the platinum ratings as well on here. So we have every single year we release platinum ratings for each one of the providers to show you which are the platforms that are scoring most on our kind of internal research based on the usage stats on Advisor Asset. Come on. And then the final bit of calculation after this is to then to compare that to the seeding scheme. To say, okay, well, how much are you paying for the seeding scheme now versus how much are we going to be paying moving forward? So there's all of the platform providers that it's compared it against. Again, it's ranked it based on charge and cost, again, based on the platform tier charge, based on the DFM cost, based on the model cost. So I can select P platform, P1, and then it will compare what we're proposing versus the seeding schemes. So it would just be a like-for-like comparison. It'll hopefully show us being slightly cheaper. Come on. And it will give us the critical yield as well, basically the difference between the cost. So we can say, well, look, Mr. and Mrs. Klein, at the moment, your non-advised contract is costing about 1.39. If we aggregate all of those contracts into one platform, because we can make the most of that tiered charge, and because we're using X, Y, and Z passive solution, perhaps, that's why we're able to drive the cost right down, even taking into account my advisor fee as well. And again, that's aligned with all of the other things that I've just been showing you on cash calc and Advisor Asset. These are all of the reasons why we're proposing moving across from one to the other. And it runs side by side on every single one of those pots as well. And again, I can PDF that at the very end. So hopefully that's giving you a good insight into why we built the MPS universe and how the directory works aside the MPS universe, and equally how it then plays a role within FE Cash Calc and FE Advisor Asset. Before I get onto questions, hopefully you've been asking questions throughout this. Again, as a reminder, if you have got any questions just before we close up, I will be running through these, running through the answers in a few moments. Feel free to ask as many questions as you can now. Get them in now before we start answering them. But just before I do that, worth pointing out this slide quickly. We run a lot of webinars. Obviously, we run one every Wednesday, which is what we're doing now. But we run, again, beside that, a lot of other webinars. So if you're interested in joining more, feel free to scan that QR code in the middle and join up to them. The team will be in touch with you as well. If you don't use analytics or you don't use cash calc, you don't use some of our other applications, the team will be contacting you over the coming days to offer you a free trial on Nexus AI as well. Feel free to take us up on that offer. And also me and the team publish a lot of content, hints and tips on LinkedIn. So feel free to scan that QR code on the right hand side and that will take you through to my LinkedIn account. Feel free to connect with me. And as I said, me and the team try and create quite a lot of content every week, just trying to get our users extracting the most amount of value out of our applications. Super. Should give you enough time. Right, let's just pause this quickly. Let's take some questions if there are any. Let's just stop sharing for a second. Looks like there are some questions. Let's look at some of these. I don't think these have been answered. Yeah, good question. So this is from James. Is there a category for MPS income portfolios, and can you compare MPS portfolios for income yield? Good question. Yes. So we are asked, we've basically set up a brand new process for data collection for the MPS providers. So the MPS providers are now sending us a lot of data that they weren't sending us beforehand. One of the fields of data, or two of the fields of data we're asking them to send us, is what is their yield figure? What is their last yearly yield figure? And equally, are they geared towards income? So when I was on that filter earlier and I was searching for solutions that were passive, there is also an income field we've asked the data teams to add, so that when you click on that, you can specifically find MPS solutions that are geared towards producing income. That's their main objective. Admittedly, though, even without that filter, given that we're asking the MPS providers to send us their yield figure, you can just search on that instead. Again, admittedly, this is quite a new process, so a lot of the MPS providers may not have submitted that data yet, so just bear with us. Again, the infrastructure and the plumbing is all available, so we're just now kind of waiting for the MPS providers to send in that data. But yeah, that's probably the best answer I can give you. Now, we are looking to add an income field to our filter in time, that's going through the motions at the moment, and we are also starting to collect that yield figure as well. So it's probably something you can kind of do lightly on the system at the moment, but that should get better over the next few months. Thank you for that. David, yeah, good question. On the fund filters, can I filter for DFM fee? Yes, you can. Yeah, very much so. So that would just be under AMC, annual management charge. If you just filter on that, that is the DFM fee. It's just AMC. Thank you for that. Matthew, would the comparison tool work for providers products that are not platform based, Royal London? Yeah, good question. So very much so. To be honest, I don't know what you're talking about, whether in terms of the applications, whether it's analytics you're referring to or advisor asset, but to be honest, the answer is the same on both. Yes, with using your example, Royal London, like the Royal London government portfolios, on advisor on analytics, the Royal London government portfolios are there. Under Royal London, under the pension universe, so you can go and grab those and compare those against any MPS solution easily. They're automatically available to every user of analytics. You'll find those under Royal London Governed. With advisor asset, when I was going into that tab and selecting pre-configured DFM, and I was showing you the DFMs that have enabled themselves, instead of selecting pre-configured DFM, you just simply select off-platform assets, and all of the core off-platform assets are in there, your Pru funds, your Royal London Governs, etc. And you can select those as well, and it would run the analysis. And invariably, if I were to run that analysis with the Royal London Governed Fund, as I did with ATM and TAM, when all of those platforms loaded up, it clearly wouldn't load up the 20 platforms because Royal London Governed isn't available on those, so they would automatically be omitted, and all that would appear is Royal London. Royal London Governed is only available on Royal London, so Royal London would appear and it will give you the ROI calculations on it. So sorry, long answer to a short question, but yes, on both. Yes in analytics, yes in advisor asset. We've got here Glenn. Are there plans to build a Monte Carlo tool in the gross modeler? Yeah, very good question. Yes, there is. Yep, that's hopefully hot off the press. That's something, well, it hasn't been confirmed yet, I suppose, but that's very much on the radar for 2026 development roadmap. That's quite high on the priority list, and it's, look, things can change, so I don't want to give absolute guarantees here, but it's looking fairly likely that yes, in 2026, the Monte Carlo tool will be added to the gross modeler. Cool. Another one from Glenn. I assume the templated growth rates past performance is also available on the gross modeler. Yeah, sorry. Yeah, very much so. It is. Yeah, I was using the net modeler in cash calc. So yes, yeah, easy answer. Yeah, very much so. It's the same on both, whether you do gross on it. Let's go to quite a few questions here. Another one, does the, oh, sorry, you just answered that, sorry. That's the same one. That's yeah, that's the same one. So Ruth, how realistic are the bespoke growth rates? We typically use our own assumptions, which are intended to be a little more cautious than their actual growth rate. So how might the bespoke growth rate compare? Yeah, I mean, look, there's so many different ways of skinning this, isn't there? I mean, you can use your own capital market assumptions for the growth rate. You can use past performance. You can use projected rates of return. So many different people use different rates here. But ultimately, from our perspective, my personal perspective, I don't think there's anything better you can use than a very long time period for past performance. You know, if you're looking at the average North American fund since 1990, which is essentially what it's doing, and looking at an annualized growth rate, what annually has it returned year on year? And maybe that figure is 9.9% or 10%, etc., net of fees, net of the fund charge. The average North American fund in the last 40 years, taking into account credit crunch, taking into account COVID, taking into account the tech crisis in the early 2000s, and all the bull runs afterwards, and all the different interest rates we've had, all of that mangled up into an annualized growth rate. The average North American fund has done 9.6% or 10%, whatever it is. Exactly the same with gilts, exactly the same for fixed interest, exactly the same for emerging market. I don't personally think there's a better way of doing this. Ultimately, it's always going to be synthetic. You're always trying to guess the future, so it's always going to be wrong. But I think if you can kind of anchor that on what has happened historically, year on year, on an annualized rate, taking into account all those different scenarios, I think that's a really good basis to use. But look, someone else would argue the opposite if they're using something slightly different. So it's a good question, but yeah, that's how we're doing it. We're simply looking at kind of the averages of these funds, these asset classes over the last 30, 40 years, looking at the annualized growth rate, and then kind of blending and binding it together, whatever your asset allocation is. So you've got 20% in North American, 5% in UK, 6% in emerging, 10% in property, etc. We've got a unique annualized growth rate for each one of those. Cool, hopefully that's answered that. Just a couple others. Matthew, for the regular savings withdrawals chart, is there anything available for the opposite of this? For regular savings, is there anything available in the opposite of this, e.g. what regular pension ISA contributions to each portfolio would look like? I don't know if I understand the question. Basically, we've got a regular withdrawal and a savings chart. So I showed you the regular withdrawal chart where you're taking money from it. You can very quickly flip that to a regular savings chart and show contributions going in. This is what it looks like if you to invest £20,000 into an ISA every year for the last 10 years, 15 years, whatever. You can't, it has to be regular though. There has to be regularity about those contributions. You can't say, I want 20,000 for the first 3 years, and then what would it look like if we'd gone down to 10, and then 5, and then up to 12, etc. It has to be regular. You can't really do kind of money weighted returns in that sense, in terms of kind of different regular amounts going in and out, or kind of a blend, sometimes coming out, sometimes coming in. You can also do that with cash flow moving forward, but certainly not backwards looking. You may have seen that we've just acquired Contengo this week, which is basically an amazing application that aggregates all of your valuations and transactional history into beautiful dashboards, giving you kind of a full 360 view of your clients' assets and portfolios. So we're fairly confident with that data coming in, we will be able to do just that. We will be able to create true time-weighted and money-weighted return series, showing the discrepancies when you do have different regular amounts going in and out. So hopefully that's answered that question. David, how does this work for tailored bespoke MPS? So we basically have a tailored MPS service. So you're right. There's a load of advisory firms now that have a tailored MPS. In other words, you know, the likes of someone like Bruin has their off-the-shelf model portfolio, but because you're an advice firm that maybe has quite a lot of AUM, Bruin will promise to portfolio proposition just for you. Well, the good news is we support tailored model portfolios in so much actually as if you look at our database, we've got 1,500 off-the-shelf model portfolios, which we've just been looking at there. On the other side of our database, we manage 1,500 tailored model portfolios of what I've just said there with the likes of Bruin. So when the likes of Bruin and Tatton and even ourselves build a bespoke range of models for someone, we can support that on our database, and we then just plumb that into the relevant analytics account that's using that tailored model. So everything I was just showing you earlier in analytics, and I was using that LGT model and I was pushing it across into the likes of cash calc and even hard coding it into advisor asset, all of that's available with tailored as well. There's no different. And I suppose more importantly, you can then compare the tailored model versus the sector as well. Okay, it's not going to be within the sector, but it's got its own growth allocation. You could see that my tailored balanced model has a 60% growth allocation. Great. Well, I've got a sector here. I can compare it against that sector, see how well it's doing. So yes, tailored is part of our kind of wheelhouse, and that can be plugged in to any DFM that wants to share that tailored model solution with these advisors. We've been doing that for quite a few years. Henry, are we still reliant on MPS providers approving the activation and continue giving access to the data in the MPS universe? Yes and no. So you're reliant on the providers enabling you through the directory, not the universe. So when I was discussing the universe earlier and I was going in there and clicking on the universe, and you had all of the MPS providers there, and I went and grabbed Quilter Well Select and had a look at its fact sheets and the sectors and the ratings and the filters. None of that needs to be enabled or permissioned by anyone. We've done it already. We've permissioned you with the universe. You've got access to that. When it comes to the directory, when you're pulling across the portfolio into analytics as a portfolio, so I can create charts and tables and reports and risk profiling, yes, that has to be permissioned by the DFM. If I went to the Bruin logo, hit the Bruin logo and said, activate me for the Bruin set of models, Bruin would have to say, yes, I'm happy for that advisor to have access. And that, as you probably know, that kind of activation mechanism probably takes a day or two to go through. Once the providers say yes, that data then floods into your analytics account. But you can still access Bruin via the MPS universe without being permissioned. And you can access those models in advisor asset without being permissioned as well. Cool, hopefully that's answered that. Only a couple more. Glenn, We would like to be able to get detailed performance and ratios for the MPS marketplace, ideally building a report and extracting this to Excel for further analysis. Can this be done within this tool? It's probably one to reach out to us separately, Glenn. So basically, yeah, sorry if I mumbled that, if anyone else heard, we would like to be able to get detailed performance and ratios for the MPS marketplace, ideally building a report and extracting this to Excel for further analysis. Can this be done with this tool? No, it can't be. Not in analytics, that is. You can't extract all of that data into Excel. There's a feature and an application of ours, a product called FinExcel, which, as the name suggests, is our database in Excel. So you can do it on that. That's a different application that one of the team can walk you through if you want to reach out. It's kind of like a bit of a premium product. We've had FinExcel now for some years, and it's really there as a kind of a data mining tool. You can go in there and run deep data analysis on any of our data sets, unit trusts, model portfolios, etc. So you're talking about comparing multi-asset with model portfolio. All of that data is plumbed into FinExcel, available through Excel, and you can do anything you like with it within Excel, and it will automatically dynamically refresh on command as well. So yeah, feel free to reach out to the team on that. In fact, the team, I think, will be reaching out to you anyway, so feel free to ask them about FinExcel. And just one last one, Neil. Why are charts, tables, reports not available for the full sorry, I keep mumbling this. Why are charts, tables, reports not available for the full MPS universe? It's basically the underlying holdings of those MPS are embargoed. It's basically the IP of the MPS providers. So if we allowed the MPS model portfolio to be shown on a chart, table, or report, you could crack it open and show the underlying holdings, which is embargoed. So, which is why when you go into the fact sheet, you won't get the top 10s either. So yeah, that's the core reason. It's embargoed, so you have to get permission from the DFMs to be able to pull that data through for you to be able to access it. Understandably, because if not meaning to point fingers here, but yeah, Tatton could ask for access to Bruin, and if there wasn't any permission, suddenly Tatton get access to all of Bruin's portfolio without permission and be able to see all of their underlying holdings and all the changes they're making, which understandably for Bruin and Tatton, they don't want to share that with others. Yeah, cool. To be honest, I didn't expect this demo to last as long as it did. So thank you for those of you that are still with us, nearly on the hour. Hope again you found that useful. Hopefully we've answered all those questions as best we can. Actually, typically there's just one last one here. Sometimes GPPs will have a discount to the standard AMC. Is there a way to reflect this in both analytics and advisor asset? No, it's a good question. You can add in additional charges. You can't put in discounts, annoyingly. It's something from a tech perspective we could add. It's been requested quite a few times, and I do sympathise. Yeah, very much so. I think that is something we need to look at. As I said, you can go into a portfolio and levy in additional charges, but you can't put a negative charge in there for some reason. But again, from a tech perspective, we could remove that presumably restriction and put a negative charge in, so I can essentially offer myself a discount on that portfolio. So yeah, that is something that is definitely on the radar. But yeah, unfortunately not at the moment. You can't. Cool. Thank you very much for all the questions, folks. Hopefully they've been answered. And thank you very much for watching. Hope you found that useful, and have a lovely rest of the day. Thanks for watching.